Hello, welcome to the Invest in Value channel. I am Victor, and in this video, I'm going to cover the retailer Macys. This is a company that's had its ups and downs, but has really provided a great investment opportunity on several occasions. Before I jump into analyzing Macys, do me a big favor and like my video. Consider subscribing and click that bell if you want to be notified when I release a new video. Now, I like to scorecard investments and see if they're a good buy or if I should be selling. And my scorecard has three variables in it. First, I want to get a discount on the stock price. Second, I want to know that the company is operated and performing well. And last, I want to know that the timing's right to buy a particular stock. Now, let me tell you more about Macys. Macys has been a retailer for a long time, and their stores are quite nice, and they have real nice products that range from clothing, apparel, shoes, perfumes, houseware, all kinds of things for your home or your personal life. They also own Bloomingdale's, which is another nice retailer. And last, they have an e-commerce presence, and that e-commerce site has been growing quite well. Overall, what I've seen, the pandemic, Macys and a lot of retailers were pretty much left for dead in 2020. But I think everybody was a little surprised as to how many people went back to the malls, how many people wanted to get out of the house and go shopping. It kind of makes sense, right? It's human nature. We don't want to be cooped up all the time. And there weren't a lot of options out there to go spend your money at. Meanwhile, the government was pumping a lot of stimulus money into the economy, putting it in the hands of consumers. So Macys benefited greatly over the last 2 years, and they're in a great spot now with great financials and a consumer that still has cash to spend, still doesn't want to be cooped up, and is looking for maybe a staycation or a local experience, which I believe Macys provides that person, a one-day getaway to go shopping, go buy something nice, go buy something nice for their spouse and so forth. So that is Macys, their business. So over the last 5 years, Macys stock price has gone up and down, and it's really provided really nice points to buy into the stock. I've owned the stock more than 5 years. I've owned it and sold it, owned it and sold it. And I owned it, prior to 2018, saw it rise really nicely. It started to go down, and I didn't quite understand because their financials were good. Just the market didn't like retailers at that time. So I exited my position and then really stayed out of the stock for about a year. And then COVID hit and the stock really plummeted. And this is where retailers were left for dead. I started buying into Macys at this time because I was seeing, news reports that people were getting out of the house. I was seeing foot traffic that mall operators were reporting. And in essence, I thought it was a good investment. It was worth the long shot, and it really paid off. My money just took off. The stock really did well. It hit a really quick high, and then I exited the position again. So I made, I lost some money back in like the 2019 timeframe, and then I made money in the 2021 timeframe. And more recently, after it dropped, I've been buying into this position further since it provides opportunities to buy the stock. So it has had quite an interesting up and down 5 years. It provides great places for you to buy into this stock. Now, fundamentally, this is a sound company. They have a market cap of 7.37 billion. They have a price to earnings ratio of 5.8. That is super low, just a great PE ratio. They pay a dividend of 2.44%. So you're getting paid a nice dividend with a company that gives you really good upside. Now let me calculate what I think Macys is worth. What I did is I took all their financial data and put it into my value calculator. Let me take you through that. First, I'm using 11% as the discount rate, which is a very conservative number to use. They haven't grown much over the last 5 years. They've actually are about the same level as they were 5 years ago. But I expect they're going to grow 2%. That's a safe growth rate over the long haul because that's even lower than inflation. So I'm using 2% as the growth rate. I used the average free cash flows over the last 3 years. And the reason for that is 2021 was a really good year. But prior to 2021, 2020 was a tough year. So what I did is I added the last 3 years divided by 3 and got 1.5 billion in free cash flow. That's a more conservative starting point that I believe the company will, probably exceed, but it's a conservative free cash flow expectation. So looking at the free cash flows that we expect in the future, I discounted them and provided a net present value of those free cash flows and estimated that the company is actually worth about 13.35 billion in value, but their market cap is only 7.3 billion. So it really provides a solid discount. They have 285 million shares outstanding. So on a per share basis, I believe their value per share is $46.87, and their stock price is only trading at $24.24. So you have about a 93% discount on this stock. Hey, taking a look at the performance of Macys, they had a very good 2021. They had 43% revenue growth. 2020 was heavily affected by COVID, so their compare was quite good. 43% revenue increase, and their digital sales continue to grow really, really well. They paid a dividend of 2.44%. They generated free cash of $2.3 billion. Phenomenal. And remember, their market cap is less than 8 billion. They bought back $500 million worth of stock in 2021 as well. Very profitable and a very low PE. They provided guidance for 2022, and they're guiding that they're going to be flat to 1% growth. Guidance tends to be fairly conservative. That way they can beat expectations. So that's good that they provided flat to 1% growth. I'll get to what I'm predicting in a little bit. They have a good dividend. It's a profitable company, and they're guiding that in 2022, they will be in an earnings per share range of $4.13 to $4.52. My outlook is consumers are going to continue to go out and shop. Consumers continue to have discretionary income that they want to go have fun. They want to go buy themselves something nice. They want to update their wardrobes. So I believe Macys is going to continue to grow. People are getting out to the malls. Foot traffic in malls is really good. So Macys will grow a little faster than what they're guiding. There's good upside in this stock, and you get paid a dividend while you hold this stock. So let's take Macys through the scorecard. First, are we getting a discount on this stock? Absolutely. We're getting a nice discount on Macys. They generate great, discounted cash flow. Even using a conservative method, it's a discounted stock. It is well operated. I got to tip my hat to this management team. COVID, threw everybody through a loop, but especially retailers. These guys really operated well during COVID. They really know the retail industry. They've grown their e-commerce business. So, kudos to that management team. And then the timing is very good. You're getting a lot of dips in this stock, so you can pick it up, at a very good price and then watch it rise. So just a quick reminder that my video is for entertainment purposes only. I'm not recommending you buy Macys or any other stock or security. I like to share my experiences as I invest, and I hope you found it interesting. So thank you so much for watching my video. Take 2. Thank you so much for watching my video. Please do me a big favor and like my video. Consider subscribing to my channel and click that bell if you want to be notified when I release a new video. With that, thanks again, and good luck investing in 2022.